8:30 a.m. guys. 4 mornings I've come on here and told you this market wanted to go higher, and for 4 mornings it had delivered perfectly. Yesterday finally did this thing it had failed at 5 separate times. Nifty closed about 24,000. The resistance became the support, and the Sensex pushed back over 77,000, a clean breakout. And then the moment we went home, the cloud we had been trading under broke down. The United States held rates but turned hawkish. Its new projection now point to a rate hike this year instead of a cut, and Wall Street faded onto it. So we walk into Sensex expiry holding a fresh breakout in one hand and a hawkish Fed in the other. Today the option chain tells us which one wins. This is the Tanmay Edge. You are listening to episode 63. I am Tanmay Gurtagoti. Let's go. Let's start with the tape we are defending. The Sensex closed at 77,155, up 347 points. Its fourth straight green day. After tagging a high of 77,219, Nifty added 96 to close at 24,085. Its first ever close above 24,000. After 5 rejections, 32 stocks up and 18 down. The leadership was a broad and cyclical. Trent was up 7%, Bharat Electronics up 3%, the IT pack with Infosys, Techem and TCS plus Tata Steel, Bharti, Sun Pharma, Titan, State Bank all green. The drag was private financials, Axis, Kotak and Bajaj twins all in red. Metals, defense, IT and energy leading, the lenders holding it back. Hold that shape into your mind. Now the overhang. Overnight the Federal Reserve held its rate. That part was expected. The surprise was the tone. The dot plot, which is the official own forecast of where the rates go, shifted up to a point at a hike this year, and the language about future cuts was stripped out. This was Chair Swarsh's first meeting, and he set the hawkish marker. Wall Street faded onto it. The S&P and Nasdaq both ended in red. The 2-year government yield is up. The dollar is firmer, and yet here is the first tell our own market is shrugging it off. GIFT Nifty is trading near 24,057, barely 24 points soft, point to an opening of a flat, not a gap down. The morning tone after hawkish Fed read. The reason sits in the commodity screen. Brent crude at $78.5, a 3-month low and a 4th straight down session with the US-Iran deal due on Friday. Cheap oil and a firm rupee near 94.5 are the cushion under this breakout. Now the part that decides today, because Sensex settles this afternoon, so let me actually read you the chain, the OI where the big money has parked up and what it implies. Two things happened yesterday, guys. First, the put writers, the people who sell puts because they are betting, we hold, piled in at 77,000. They added almost 17.5 lakh contracts at one strike in a single day, taking it past total at 21 lakhs, the single heaviest block near the ATM. That is your support, and remember it. And it was built yesterday, not last week. So it is a fresh conviction money. Below it, 76,500 and 76,300 hold the next support walls, each above 21 lakhs. Second, the call writers, the people who are betting we will stall, stack their heaviest fresh calls at 77,500, almost 8 lakh added over there, taking it past 15.5 lakh on the total, the heaviest near ATM call. And yes, there is a bigger standing call over interest further out at 78,000, but that is the resistance for another week, not the number that pins on a 0 DT. So the chain itself draws the box. Support at 77,000 with fresh money, resistance at 77,500, and the whole structure is still leaning bullish. The PCR across the Sensex chain is still standing at 1.35, meaning more writers are betting on the support than on the breakdown. So now the size of today's move, and I'll give it to you in two ways, because they should agree to each other. The ATM straddle, the price of buying both calls and put together at 77,200 is about 470 points. That is the market's own quote for the day's range. Late on the close and the straddle implied bands trade at 76,690, that is 77,700 on the downside to 77,625 on the upside. Now the second method, the one standard deviation statistical envelope, that takes the straddle and you get about 585 points, which gives us a band of 76,570 to 77,740. Two methods, two bands that bracket each other, and notice the floor of both land onto that 77,000 mark and 76,500 support, and the roof lands on the 77,500 wall. So the math and the positioning are telling you the same thing. The expiry should resolve between roughly 76,700 and 77,500 unless something snaps in. And here is the piece most people skip, the gamma, which tells you how the day moves, not just where. Think of the big option dealers where their gamma is negative. They amplify the tape, they sell into the weakness, buy into the strength. So moves feed on themselves and the day trends and whips. When it is positive, they do opposite. They pin the tape and the swings die. On Sensex, the gamma flip level and the hang stands at around 77,300. So we close at 77,155, which means we are sitting below the gamma flip level and in a negative gamma level. So that is important on 0DT, because below the switch a push lower can run, it can amplify. So only if we reclaim 77,300 do the dealers flip to pin the tape towards that 77,500 mark, else we are going down. And the contrast, that the Nifty, which closed at 24,085 above its own gamma flip level, that stands around 24,050. So Nifty is in the calm zone, pinned zone today, while the Sensex, the index actually that expires, is in a jumpy amplified one. That single line 77,300 is the most important number on your screen today. Underneath all of it, the positioning is a twist. The FIs bought cash for the third straight day, a small 179 crore, and DIs bought around 1700 crore. But in the index futures, the FIs is still net short around 2,25,000 contracts. They trimmed it barely by 5,000. A market made a fresh breakout, while its biggest player, who is short, is still holding them. If 77,000 holds today, that short is squeeze fuel. The retail crowd is net long, about 1,57,000 contracts. The proprietary desks are flat. So the whole day is foreign shorts versus retail long across the 77,000 line. So here is the plan, guys. And on 0DT expiry, sitting below the switch, it is disciplined, not a brave move that we are going to play. While we hold 77,000, the fresh money, the bias stays up and reclaim above 77,250 to 77,300. The switch level flips the dealers to pinning and opens a run towards that 77,500 mark. Lose that 77,000, and because we are in an amplified territory, there is an air pocket straight down to that 76,700 mark first, and then 76,500, the next support on the option chain. On the Nifty, we are above the switch, so 24,000 has genuinely flipped from a ceiling to support. We should fall below that 24,000 once, by that dip towards that. The straddle there frames a band of 23,800 on the downside. That is where the market should take a support to 24,380. Take something off towards that 24,200 250 range, and the long is wrong only below that 23,900 mark. And size everything down, guys. It is expiry, the Fed has turned, and below the switch the open will be jumpy. There will be sharp moves. The simpler trade is cautious and about that low volatility. India VIX is back near that 13.5 levels. The Sensex implied volatility was also crushed 9% yesterday, and cheap premium on 0DT looks like a free lunch. It is not. We are below that gamma switch, which is exactly where a single headline can whip the tape and turn a solid sold option against you in minutes. So do not sell naked premium into the expiry, and do not chase the opening gap in the first 15 to 30 minutes. Let 77,000 or 77,300 prove itself first. So Thursday in one breath, guys, we hold a real breakout. Nifty over 24,000 and Sensex over 77,000, but the Fed has turned hawkish and today the Sensex expires. The chain draws it cleanly. A floor or a support stands at 77,000 with 17.5 lakh fresh puts. A resistance stands at 77,500 with 8 lakhs of fresh calls, and a switch level or a level to watch for is 77,300. An expected band is 76,600 to 650 on the bottom side, and the foreign desk still short into it, so watch that level as well. Below the switch, the move amplify, so respect 77,000, reclaim above 77,250 to 300 for the upside, and lose 77,000 and 76,650 to 700 is coming very fast. Cheap oil is the cushion, the hawkish Fed is the risk. Call it the breakout versus the Fed below the level. One last thing, guys, episode 62 graded almost 5 on 5. Another clean read. Full scorecard is available on rupeecase.com. Trade that level, not the opinion. So this was the Tanmay Edge. If this helped you guys read the tape and expiry and trading day more clearly, share it with one trader friend who needs it right now. Hit that subscribe so you never miss a morning stream. Stream it fully free and first on rupeecase.com and on Apple Podcasts, Spotify, Amazon Music and elsewhere as well. Every trading morning at 8:30, and leave me a rating, guys. I read every single one of them. I'm waiting for your reviews. Have a great trading day, guys, and a happy expiry. See you once again tomorrow.